Welcome everyone to this October 9th version of the Real Life Trading Swing Trading Room. My name is, our mission is to enrich lives. That's very important. My name is Brad Reed. That's not important. But I am a real life trader, and I would like to encourage you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. What's going on, everyone? Thanks for being here. Thanks for watching this video. Thanks for logging in live. I have not had an overdose of caffeine. I have had an overdose of some pretty nice trade setups. So let's take a look and see what the market is doing. Yesterday, we had a pretty bullish looking candle, and today we had higher highs and higher lows. Benjamin typed in Slack channel that means that we're not going to get bullish divergence, but because we did make a lower low here. Yep, all that looks good. Now, Benjamin did say something about the hourly. I don't see it right here, right now. Oh, there it is. So if we look at the lower lows on the hourly on the SPY, we do have higher lows on the stochastics. So if it's the hourly, this might be that divergence playing out. But folks are hopeful that this is the bottom, and instead of doing all those dips and sideways actions and things like that we've been talking about, folks are hopeful that we just go rocketing bullish. And I kind of hope we do that too. But like Latoya said, I'll just wait and see. Like I said, well, like you don't know, but like I have been saying, and like I said on the stock review video I just recorded, I think we wiggle here and then come back down one more time. And then I don't know if we're going to bounce there, or bounce there, but I think it's one of those three. I hope I'm wrong, and we just go gangbusters like that. Let's see if there is any more information to learn from the DIA. An inside day candle, and I think it was Vito was reminding me today that, hey, when you get an inside day candle, whichever way it breaks tends to be the direction, at least for a little bit. So if we go higher than that tomorrow, we might just start going. But if we go down tomorrow, likely to come down and retest one of these old resistances as new support, somewhere around in there. We still have the 50 to provide support and the daily 100 on the DIA. So if there is a bearish move, at least for the time being, I believe it will be quick and fleeting, just a couple of days to 1 or 2 weeks. Again, a bullish candle, higher high, higher low, a little bit of an upper wick, but nice volume coming in on that daily 100 simple moving average on the Qs. We shall watch it and see what we do. Any indications here? No, nothing new there from the stochastics. Nope, no new information that I see that is not as expected. Might as well just switch over to the IWM, and let me turn that off and go back to the candles, and we'll see what we got. IWM, a little bit more of a bearish looking candle with a long upper wick. It did make higher highs and higher lows, but the IWM is also at that support level. So let's see if the IWM can wiggle. Again, I don't think the wiggle will be that clean. I think it'll be kind of nasty for a little bit. But yeah, those are kind of my thoughts on the IWM. Questions, thoughts, opposing views from anyone in the chat pane, type them in. And if you guys are watching this video at home and have questions, you can email me, brad@reallifetrading.com, brad@reallifetrading.com. Send me your questions. Let me know what your thoughts are. Groovy like a smoothie at a movie showing Rudy. A drive-in movie. Darn it, messed it up. DDD, Naked Put, October 19th. Holy smokes, that's coming up soon. That's like 10 days away. Everything looks solid on that. Earnings coming up at the end of the month. I don't see any real problems with that Naked Put. might be a little bit more bearish than bullish there with, looks like it just sort of retested that neckline. And if it goes lower, I think your next support's the daily 100 simple, that level. But there is tons of support between you guys in that naked put. Looks like it is primed for some bullish divergence. Hasn't shown it yet. Hasn't shown it yet, but it might be ready to do so. So yeah, nothing to worry about on that naked put. Jeremy sent me a message today. I said, yo, dude, what is the plan on that Tesla put? And Jeremy says, I'm scrolling. My official plan is to wait over earnings and buy to close after earnings. So that is Jeremy's plan on the naked put on Tesla. So earnings are coming up, looks like November 2nd. And yeah, when after earnings, so if you are holding any kind of options, usually right after earnings, volatility decreases significantly. And by volatility, I mean implied volatility. And effectively, that means that the premium of any options will go away substantially. So that's a good thing if you have sold options, right? Because you want those to go to zero. If you have bought options, just be careful. That's why when we say if you hold shares of anything, to if you're holding shares, to buy puts over earnings, but don't pay for a whole lot of time, because the value after earnings goes down significantly. Just want to send a shout out to Jordan Bolin. Made 1.7 R on Tesla on that bounce off of support. Wicked awesome. Simon B says hi. What's up, Simon? I'm on a roll today. I don't know what it was. Victor, can you keep me under control? Sashi's here. Charles March is here. Angela, what's up? Anyways, lots of fun people here in the chat pane. You guys rock. Let me get back to trading because I got some stuff to discuss today. Victor says, I will try. Man, I didn't think I had that much caffeine. I'm pretty pumped though. Who needs caffeine when you're trading stocks, right? So the plan here is to hold it over earnings. So if you wanted to close that out for 50%, that's fine. But right now, let's hold over earnings and then close out for a sweet profit. Party on. Masashi says, when you say you got something to say, I have to wonder if it's about football. I don't talk about football that much, right? I mean, Blake asked today in the day trading floor. So I explained, not that it needs to go into any recordings, but I explained that I beat Jeremy Newsom in fantasy football this last week. Stephen King's in first place in our league. And for those of you that may have joined since July, we have a fantasy football league. So if you like fantasy football, hit us up. We do some weekly or daily fantasy football as well, but let us know. We'll get you in our league for next year. I've been watching for this on Skechers. It looks even better now with that upper wick. However, with the exact numbers that I have, that lower wick would have triggered me in, and that upper wick would have missed me by a penny. So, yikes. But I did not do this one because earnings are coming up, and some stocks tend to act kind of funky when earnings are coming up. Either most of the time, I think that they fall asleep and they just kind of go sideways. But as we can see, this one can get wild and crazy when earnings are approaching. So if you like Skechers bearish right now, I'm just watching it for fun. EA, Electronic Arts, if anyone caught this swing trade, fantastic and congratulations. But that thing is running more bearish than bullish for sure for now. I thought yesterday I lowered the stop. If I was in this one, I would have a stop. I think that missed the entry just by a little bit. 115.75 there. Yeah, so, well, shoot. I know I did this yesterday, but I just lost it. 115.76 if you are doing this this play on Electronic Arts. Remember, earnings coming up very soon, so whatever profits you can, lock them in. And in fact, if I'm going to say whatever profits you can, lock them in, I'm going to take that stop down to 113.51. That's a pretty aggressive stop. Normally, I would like it much, much higher. Give it room to maybe do one more little breather retrace before rolling over. But with earnings coming up, you got to lock in what you can. If you are holding shares of Electronic Arts, if you're holding shares of anything over earnings, be sure to buy yourself a protective put that expires the Friday after earnings. Shack Attack, again, I like this one bullish. The more it wiggles, the more I like it. But with earnings coming up, I am going to wait and just chillax and chill out on that one. Ticker CVNA. Benjamin says, there you are. I had to exit and reload. Cool, Benjamin. I'm glad you're here. I got some setups to look at. So CVNA, we were looking at a bearish play there, but I was worried that support was going to come somewhere in this range. So if you did take that, congratulations. I was chicken because earnings are coming up pretty soon, but it worked. Woohoo! So if you took that with shares, you should be up at least an R. Again, I'd have that stop below entry right now, and I'd be closing out somewhere in here. Earnings are coming up pretty soon, and if you can lock it in, do so. Julian says, do you always buy protective put on your long time holds before earnings? Yes. Even the long time holders. So let's say you got something like Apple. And you bought Apple down here at 100. Oops. All right. You bought that little thing right there. Actually, you bought that dip right there. So that was your trade on Apple. And you don't really want to sell it, but you should probably move your stop up at least a little bit, right? It'd be a shame to lose on that trade. Over earnings for Apple, you can buy a protective put at just say, I don't know, 212, something like that. That ought to be pretty cheap, especially when the price is going up. It's not going to cost you very much. And what happens if Apple gaps down to there? You can exit all of your shares right there if you want to. Even if you don't want to, you can close out your put for a massive, massive gain. It's just like Benjamin said, it's a little bit of insurance. They're called options because you have options. You got choices. Obviously, there are lots of people that just hold through earnings and write it no matter what it does, but it gives you a lot of leverage and it's not that much. So yes, if I have 100 shares or more of something that is optionable, I will own puts. Benjamin says, it's insurance. Price will be inflated, but you don't plan to use it. But when you need it, you'll be glad you have it. Julian says, only if 100 shares or more. So each contract equals 100 shares. Yeah, thank you, Benjamin. If I have like 13 shares of a stock, then no, I'm not going to buy a put. I'm probably just going to close it out for a profit before earnings. But yeah, if I have like 87 shares, yeah, I'll go ahead and I'll buy a put. Absolutely. Keep asking questions, Julian. This is important stuff, and there are a lot of people that have never done it yet, that have never done it. So keep asking questions and help those people out. So let's see, CVNA, I think I talked about that one. MU. I was sharing my trade with my MU trade with Jeremy Newsom today, and he was like, "Awesome!" And he was saying, "Hey, if you want to use this for the weekly options newsletter, you can." But I'm like, man, you would not believe the gem that I have for the weekly options newsletter. So MU working nicely. It has had 1, 2, 3, 4, 5 bearish days in a row. It kind of needs to do one of those. And if it does, you can get in too if you want to. I am not going to make this the weekly options newsletter because I shared this with y'all last week, and I thought Jeremy Newsom was going to be back this week, and he would be doing weekly options newsletter magic. If you want it, there it is. If it's not in your trading plan, just wait. I did lower the stop today for anyone who is following me with this one. I lowered the stop to $1 or 99 cents, pretty much because it does need to rest a little bit and then roll over, kind of retest that area that it broke down through. But if it does come into the mid to low 40s, I do have a limit to exit at $5 on the option. But I do have an alert here that says, check the value of the option. Either close it up for a nice gain or slam the stop down to see if you want to let it ride any lower. So that is my MU trade, working nicely. I think the value of that option's up to just a bit under $3. Nope, 2.5. 2.5. So I'm only up 30 cents, but I'm up. Woo! Winning, by the way, is better than losing, in case you hadn't done it before. MU, is it extended? Oh, look at that. Bottom Bollinger Band is pointed down. The upper Bollinger Band is pointed up, which means some volatility may come into it. Basically, just saying it might rest and roll back over. That would give this upper band time to do one of those. The bottom band to turn on down and give us some nice targets. I really like that picture. Stokes and RSI, what does that look like? Oh man. Benjamin, do you see what I see? He says, yes, sir. I see bullish divergence. I may be closing that one out early. Benjamin, you're reading my mind. It's scary in there. Get out. He says, might be time to tighten that stop or exit. Yep. This is probably why the put premium is not going up any faster than it is. So I may make some, you know what, tomorrow morning, I will likely lower that stop to there. And with this picture, I am now not willing to lose on the trade. It says RSI at the oversold line. Yeah, RSI can get low though for this one. I mean, RSI can get dirty. So it's not the RSI that bothers me nearly as much as this bullish divergence. I do not like that. So I may exit. Benjamin's saying with a bullish divergence and that there, both of those things combined are not bearish indicators. So yeah, I will likely lower my stop to whatever the low of today was, maybe somewhere around 249, 250 to lock it in. And I might be exiting tomorrow if it continues bearish. If it goes bullish, I'll likely exit that and I won't lose. Not losing is good. Cool, Benjamin, thank you for your help with that one. FedEx is one that I've been liking a lot. I would have made this the weekly options newsletter, but I didn't like the option choices on that. But it is into target 1, so start taking some profits. Let's see, I think yesterday I lowered the stop into there. Let's see if we get bullish divergence on this too. Stokes and RSI. No, not bullish divergence there. That looks nicely bearish. Are we outside the Bollinger Band? No, we're not. So room for this thing to continue down. I like it. So, one support hit. Sorry, yeah, one support hit. So honestly, and this is another reason why I didn't take the trade, because I didn't like the reward risk. I'd lower that stop to below break even and give it room to take some more profits. That's my thoughts on FedEx. Red Hat. This one was the weekly options newsletter last week, but it didn't fill. I wanted that option to come back up, and it just missed it. But rolling bearish. So if you are in this Red Hat trade, that has been a really nice run. You are into some pretty strong support. I would have closed out today. Just yeah, you're in the support zone there on Red Hat. So time to close out. Thank you, Benjamin. Appreciate it. Well done for those of you that took Red Hat. Accenture, very interesting double top looking beast there. Coming down, retesting this level here. Again, Accenture on our watch list for a bullish bounce. I don't believe in that double top, but we shall see. Bearish volume increased today. So maybe that makes me believe it is not quite just the complex bullish flag pattern that I thought it was. Let's see if we can wiggle or come down into the 100, come back up and wiggle, and then run bear. I don't know. We'll watch it. I'm watching it. We'll see. I just think it's got more in it than that. Waiting. Julian says, I'm in a call since 4 days ago. Oh yeah, I got Neo. Time for Neo or P. I will make time. Okay, so Julian, in Neo. All right, that's coming up soon because I'm pretty excited about that one. In fact, I'm going to build the suspense to my 2 favorite. FAS is a 3x leveraged bullish Direxion fund. I see a very nice pivot line right in through here. I see some long-term moving averages right in about there. I see what might be considered exhaustion volume on a bearish move right about there. And I see higher highs. I see we took out that high. I am all kinds of bullish on FAS. Stokes and RSI. I see bearish divergence. So I am now all kinds of waiting, but this right here could be that divergence playing out. I'm going to be a little bit more patient now. It did fail to get into the bottom band, folks. I'm going to study this one for another couple of days, maybe, but I am looking at entering on this double bottom down here with a bullish stop limit. A protective stop down in here somewhere. This is not official. I'm not going to place this trade just yet, but going a little bit longer. Benjamin says, can't miss the opportunity to buy value funds like this, but remember that earnings release are at the end of the week. Yes, for the next 2 weeks, we got a lot of big banks, Goldman Sachs, American Express, Visa, MasterCard. We looked at those yesterday at the end of day. We also looked at those Friday. Earnings are coming up. But folks, take a look at some of the bearish volume of these candles right in through here and realize that those candles are right in through here. So if those are people that are entering bullish, thinking it's doing one of these, which would make a lot of sense, right? That would make a lot of sense. If it does go higher, bulls are going to be trapped. To me, it looks like it's making higher lows. It's making higher highs. Again, that high is higher than that high. I'm waiting. I'm not in yet. Benjamin says, bears will be trapped, not bulls. Yes, thank you. Thank you. That's what I mean. Bears will be trapped. Nancy says, what do you mean when you say a stock fails to get into the bottom Bollinger Band? Nancy, let's take a look in the past when this stock, actually, Nancy, give me a stock. What's your favorite stock? Type fast. All right, while Nancy is typing in, ooh, got one already. Nancy, the idea is that stocks tend to go between the bands. So when it fails to get in to one of the bands, it tends to go to the other one. When it fails to get into that band, it tends to go to the other one. When it fails to get into that band, it goes to the other one. There it failed and it went into the other one. There it failed to get into the band, it went to the other one. There it failed to get into the band, went to the other one. There it failed to get into the band, went to the other one. There it failed to get into the band and went down. There it failed and it went up. So that could be a failure that sends it back up. Now that's FAS. Let's see if it applies to ULTA, which is the stock Nancy just typed into the chat pane. It failed there. It went in there. It failed there. It went up there. It failed there. It went down there. It failed there and went up there. That's really confusing, to be honest. That's not how I would have expected it. Failed, went down to the midline at least. But that's kind of when that craziness started. Failed and went up. Benjamin says, sometimes the midline can act as support and resistance too. Agreed. So again, it's just like any indicator. It doesn't happen all the time. But Bollinger Band failure, or when it fails to get in to the band that it's chasing, could indicate a reversal. It could, doesn't have to. But if you are curious about this strategy, I suggest you back trade it about 100 times. And go back and say, hey, look, it failed there. Where would I have put my entry? Well, probably entry, protective stop, target. That would have been an R. It failed there. Where would have been my entry? Entry, stop, probably, well, when that band comes up, target 1, target 2 would have been somewhere down in there. So would have hit target 1, probably trailed out somewhere around there, or you might have put your thing down, flipped it, and reversed it when it failed to get into that bottom band and put in a target there and hit nicely. So just go back. Simon B, everything works in the market, just not all the time. There you go. That's the Jeremy saying. But if you are considering a new strategy like the Bollinger Band, I don't want to call it a failure, but I guess that's kind of what I have been calling it. Just go back and back test it. Go back, test it 50 or 100 times. And then try testing it live with fake money for 50 to 100 times. And then test it with a small amount of real money for 50 to 100 times. And yeah, does that whole thing sound like it's going to take you 6 months to 2 years? Yeah, probably will. But if you can come up with a steady, reliable strategy that will serve you for the rest of your life, is it worth 6 months to 2 years of studying? Most people would say yes. So Nancy, if you got any more questions, let me know. But I will be definitely watching FAS for the next day or two. What I would really like to see is some bullish volume coming in. Home Depot does have earnings coming up, but is making higher highs and higher lows. So some of you buy the dip type folks might like this opportunity here on Home Depot. Momentum folks may be waiting for a break above that or above that, but you could do a buy limit there with a protective stop down there. Earnings are coming up a little bit fast for a buy the dip play, but trade your plan. Benjamin says, buy here, no brainer. Talking about Home Depot, Benjamin? Yeah, he said yes. Yeah, I agree about buying low. If there was more time before earnings, I would be more aggressive on it, but I'm not. What I am aggressive with is Lowe's. So same industry. We have more time on earnings on Lowe's than on Home Depot. Whee! So I am, oh heck. No. There's something I wasn't 100% in love with. I really like this idea on Lowe's. Bearish volume has been coming in. If we are in the bounce in the market, this would be it. If I'm wrong, and we get triggered in and we come down, I think we've got a little bit more room before we get to $2.50. But at any rate, that would be about $1.50 in risk. Not about, that would be $1.50 in risk. But when I looked at the option chain, it looks fantastic the way it was up in the $7, $8, $9 range just a couple of days ago. So I think the idea at selling for 2R up here is very highly probable. I think I'm going to do that, folks. What was it? There was something about it that I wasn't totally loving. So it looks oversold on both the RSI and the stochastics. Was it the Bollinger Bands I wasn't crazy about? I think it was the Bollinger Bands I wasn't crazy about. The fact that we are walking this band, but I suppose if we fail to get into the band, we might come into the upper band. I think that's what I was worried that the upper band might provide resistance. And with that upper band scooting up, Benjamin says he likes it. I may do this one tomorrow. At this point, I'm not going to make it official, but maybe if we get one more day or 2 more days in here, I will make that an official floor trade. Benjamin says, I only do options on $50 or higher tickers. All right, that's what this is. Now, the one I am going to make official is the weekly options newsletter, and I'll type that up later this evening, is NIO. Someone says, yes, with absolute zero or with stop. It depends on your R. My R is $200, so I cannot do an absolute zero here. I just can't afford it. But if I did do, I would be doing a stop limit entry. I would be doing the November 16, 110 strike call. Unfortunately, with the November monthlies, I can do a 110 or a 115. I'd really like the 112.50, but it just doesn't exist. So 110 strike, it would be a stop limit with this 415 stop and $4 limit. So basically I'm saying this has got to go up and then come back and do something like that to get me in. I would use $2.50 as my stop. Now, looks like with NIO, here's how I would be doing it. Because I do have a $2 strike, or sorry, $200 risk, I will be buying 2 calls of NIO, but I'm going to be buying them at 110 with a 110 limit. I'll probably use a protective stop down here at 0.10. At least that's what I'm going to report for the official trade. I'm doing November, oops, not 17, 16. November 16. With a limit of 110. That's where it closed today. So if there's a chance to get this at open, if I get filled for some reason, it does a minor gap down to there, and I get filled at like $1, then yeah, I won't use a stop. But unfortunately, I have to trade just a little bit differently when I'm trading on making official trades for the floor. At any rate, room for this thing to go. I have a sell limit of $4 up there. If you do the math, that is way more than 2 Rs. A lot of folks really like NIO. Options are plentiful. The weekly options newsletter tends to be a little bit more of a little bit shorter term swing trade than I might be willing to do here. But if you like it and you want to buy January, February, March, April, May, because you think this thing's going to go kaboo like that or something, go for it. But for the weekly options newsletter, November 16 for me. Anybody here in the chat room have questions about this, the weekly options newsletter? Go ahead and type it in. And let's go take a look at some stocks that people have requested today. ISRG was requested. It does look like it has come back nicely into a support, perhaps even into the bottom of this upwards channel, aka trend. So that's the channel, but the trend is the bottom one. That might have just gotten broken there, but into that next trend line. Earnings coming up very, very soon. So I would not be looking to get into anything on ISG. There's a chance that this is people just closing out before earnings, but that's a little bit early for that many people to be closing out before earnings. Bearish volume is for real. We might continue this fall into the daily 200 for earnings, but at least in the past, 100 propped it up, kind of extended in the bearish direction, so I don't see any reason why the 100 won't prop it up again. But with earnings coming up in just 9 days, I will not be entering anything here. If I am in shares, because earnings are coming up, I'm looking to close those out for as much profit as I can. I'm going to have a protective stop somewhere up in there. If you're a long-term trader, then you probably have your own plan on where to put protective stop, but probably somewhere in there if you are a longer-term trader. Yeah, groovy. That's my thoughts on ISRG. If you did have a question about ISRG and I did not answer it, please email me, brad@reallifetrading.com, or probably easier if you come over here to Slack and just hit me up at Brad Reed, and then everyone can see. I see Angela trying to get in, but you're in now. Groovy, that's ISRG. PAA, Plains All American. My dad is a dividend trader, and this thing is one of those master limited partnerships that pays crazy dividends, I think. 4.74%, almost 5% yield. I thought it was higher, to be honest. Maybe it was higher when my dad was buying it down in here. Earnings coming up pretty soon. This stock generally has very low volatility. It's got a low beta, which means it doesn't move very much. So if you are an owner of Plains All American, you are probably not going to have real tight stops and entries and be looking to try and make 1 or 2 R. You're probably more in the mindset of, hey, if I can buy low and just hold it for a long time, I'm going to collect the dividends rather than looking to get R's. It has been making some pretty nice higher lows and some pretty steady higher highs through there. Earnings coming up, so I'm going to have to wait just a little bit on this one before making an entry. Here's an idea for you. Sell a naked put on this one, maybe somewhere down here in the 21 area. If you do get put the stock and you have to buy the stock somewhere in this range, you are buying a stock that's going to be paying a crazy dividend. Because if it pays 5% up here, it's going to be paying 6, 7, 8% down there. It looks like dividends are paid before earnings, not after. It's really nice if you can get put a stock and then get a dividend. So you get the naked put premium and you get a dividend premium all right up front. That would probably be my plan on PAA. If I did have to suggest one, is to look for a naked put and then collect that naked put premium, and you get to buy a very high dividend paying stock. If you are a swing trader like most people here and you're looking to buy low, sell high, and then go on to the next one, probably not the one for you. Nia, I think this was your request. Are you here? Nia, not here. Okay, so Nia, when you watch this video, if I did not answer your question, go ahead and just hit me up in Slack, and I know you know how to do that. Daily 200 simple moving average. right there at support. If for some reason you are a short-term trader, I would have a protective stop there. I would have a target there to exit over earnings. Oh, I don't know, folks. With that dividend, I might just be looking to bail over earnings, or what dividend stocks that pay dividends like this, I might just be buying a put over earnings. Maybe some kind of crazy covered call, but I don't think you're going to have good premiums way high up there. Yeah, maybe something like that over earnings. And then if you have the put and it does gap down, the yield's going to go sky high. And when the yield goes sky high, other dividend investors are going to say, hey, look at that one. And they're going to come piling in and buy it up, just like they did there, just like they did there. So maybe if you buy a put, you protect yourself. And if for some reason it does just get completely wrecked and roll over because there's a change in management, or they're going to lose their pipeline, or there's a leak or something like that, then you have your put as insurance and you can sell high. So Nia, hit me up if, or whoever suggested PAA, hit me in Slack if you have more questions. Oh, I don't think I'm going to hurl, but Hormel Foods did have a nice bounce off that daily 50 exponential moving average. Earnings coming up, just like so many other things. Angela says, do you make your puts conditional? Over earnings? No. No, because if it's over earnings, I'm not buying the put if the stock does this, this, and this. I want puts. If the stock goes higher, my puts are less. I pay less premium to get them. If the stock goes down, the premium goes up, but I'm going to want the puts just that much more. So if I am going to buy puts before earnings, I usually wait the week of and buy them like on that Monday, set to expire the Friday after earnings. So be really careful if you've got something that's reporting on a Friday, because if your puts expire Friday at close and the announcement is Friday after close, all of a sudden Monday morning the stock does its earnings gap and you don't have insurance, and that's called being naked. I am bullish on Hormel Foods. Speaking of foods, I kind of like the idea of buying a dip in there. I don't know if I want my protective stop there or down there, but something like that's not, it looks like a pretty decent play. Earnings coming up, so got to watch out. Ooh. Caterpillar and Costco were requested. I think I have time to take a look at those. If you are in shares of Hormel Foods, I think you are at a target zone. If your plan is to close out before earnings, which many people do, if you're going to hold over earnings, I'd say wait for this thing to go a little bit higher, because I think it will, and then maybe you can get a better premium for like a 45, 46 covered call over earnings, if that's your plan. Protective stop right in through there, maybe there, just to lock in what you can before earnings, but I think it goes higher. Gil got it, says a dip, because it's a food company. Got it. Woohoo. Avocado dip and hummus are probably my two favorites, but I don't know why I thought I need to share that with you, but I did. So it's dinner time here. That's my thoughts on Hormel. Again, if you have questions, thoughts, opposing views, type them in. Party on. Five Below also looks like a great buy the dip opportunity. What I'd really like to see is this come down one more time, and then I can get a double bottom on what looks like a pretty nice level there. If you want to take up bullish now, that's fine. It is pretty extended in the bullish direction. Earnings are not for a while. Let's see what the Bollingers are doing. I'm guessing it pulled into the midline. No, so it closed on the band, got kind of close to the midline. I see both Bollinger Bands and the midline are angled downward. That's not the time I want to go bullish. So let's see if we can get that double bottom. And if we get a double bottom with a higher low, one that fails to get in that bottom band, that might be what we need for a quick swing trade. So I'm going to move 5 up to the watch part of my list. I'm going to turn on Stokes and RSI to see if there's anything revealing there. Nope, it is in nicely into the oversold zone, ready for a rest. Just scanning to see if there's anything to see. I don't see anything quickly. That's my thoughts on 5. Just going to wait and see what it does over the next couple of days. All right, this one is a Manly stock. Ticker HE, Hawaiian Electric. Let's get some data on here. Man, looks like it's ready to go more bullish. Darn it. Earnings coming up. If you're not in it but looking to be, hey, if you want good jokes, you got to wait for Newsom to come back. Maybe a breakout is coming. Whatever you do, make it quick because earnings are coming up. If you are a holder of this, usually these electric companies pay pretty decent dividend. Yep, 3.5%. You are probably holding this for either a dividend collector or insurance against a market dip. Usually, if we are going to enter a bearish market, the utility companies are a safe haven that a lot of investors run into because they do pay high dividends. And if the market is going to go down, might as well park it in something that's going to be paying dividends. So again, these utility companies are usually not movers, but something that we can put on our list in case we do get a more severe market dip than we had anticipated. If you are holding shares of this, I think a stop and or protective put down there about 34 over earnings makes a lot of sense. If you want to sell a covered call up in the 39 range over earnings and collect that over earnings premium bonus, I think that's a decent plan as well. I'm not going to enter anything on this because of earnings coming up fairly soon. Questions, thoughts, opposing views, type them in. ABC, easy. Let's see. I was looking at earnings for this one, but I think the fact that, I was looking at options for this one, and there was just something I didn't quite like about it. Maybe it was earnings coming up. I like the, okay, I remember what it was. I had less data on my screen. I was looking at buying the dip, something like this, or maybe with the stop a little bit lower to take it higher. But with this much data on the screen, we can see that this is a pretty wicked resistance level. So with earnings coming up, if I am a active swing trader, this is probably my exit zone of the channel. Right, this is the buy zone of the channel. And you are coming into your selling zone. I don't think I would short it. I don't think there's time for it to get back into the buying zone before earnings. And some stocks do tend to get a little wonky before earnings. If I am a holder of ABC, a protective stop, maybe down here in the buying zone, maybe underneath those moving averages, or probably, probably just right up there. I'm going to lock it in if I can before earnings. If I'm not in, I'm waiting till after earnings. And if I am in, moving my protective stop up to there, exiting in this resistance zone. And if I'm not exiting, I'm tightening the stop and buying a put. Those are my thoughts on ABC. If you got questions, let me know. Pandora does have earnings coming up also. making lower highs and lower lows as we are retesting. Looks like this 50 was a nice support over there. Could be nice support again. With earnings coming up, I am waiting. I'm not going to be entering anything. If I am in shares and I'm an active trader, probably a nice type stop somewhere in that range. If I'm a little bit longer term, maybe stop down there. Maybe I have my stop down there. I would still consider buying a protective put right up in there if I have some shares. I like the idea of a covered call up there at 12 if I can get good premium over earnings. So that's what I would do if I was in. Questions, thoughts, opposing views, send them my way. Again, a lot of these plans are going to change as earnings season is approaching in the next 3 weeks. Folks, if you have shares, if you have close to 100 shares or more, be buying protective puts over earnings, please. Caterpillar looks like a resistance zone right up in here. Uh-oh, wrong button. Resistance zone up. Oh man, I'm just botching it. I promise I have used the software before. Resistance zone right up in there. That looks like a double top with, ooh, look at that bearish volume coming in right there. So if I were not worried about options coming up in 14 days, I would be looking to get bearish on Caterpillar with puts down into the 142 to 40 range. So if you are a quick trader and you want to swing that on down, that's not a bad play. But yeah, earnings are coming up. Julian says, hey, what if you have leaps? So leap is an option that expires 9 months or further out. So a lot of people, some people like to buy a call on a stock that has 1 or 2 years on it. And the idea is that they can use that for protection and various plays over the course of that time. And yeah, most stocks over 1 or 2 years do go up. Julian says, if you have leaps, do you buy protective puts over earnings too? I would, Julian. I would. Again, a protective put is just an insurance policy. If you do want to exit, a put gives you the opportunity for a synthetic exit on your synthetic long, if that's what you did. But Julian, if you've never done it before, just do it virtually. I don't do leaps. I don't think I have ever done leaps. So that's never been something I had to consider. Julian says, I'm in leaps. Anyone that trades leaps, do you buy protective puts over earnings? What is your plan? Please send some assistance to Julian. As I have never done leaps before. There we go. Let's get help from the team. So if you're watching this video, please feel free to swing over and send, and you do leaps, please send Julian some advice. Julian, I think it'd be one of those things where I would have that plan before I got into the leaps. Never done it. I like protective puts over earnings. They're usually pretty cheap and they can come in handy. And you can always just sell the put for a profit and hold on to your shares or your call. Groovy. Again, Caterpillar looks double top-ish. We are at the top of the channel. So there's your selling zone. There is your buying zone. And earnings coming up. So if you are a holder of shares, and you want to, your plan is to sell those before earnings, I think you've got your signal to get out either with a tight protective stop or a target. If you're going to hold over earnings, buy your puts. You might consider buying your puts now, because if that thing goes lower, the higher the put, the better. Great question, Jillian. I appreciate that. Costco just had earnings. A lot of people made a lot of money on that day trading that thing bearish. I was there. I witnessed it. I did not partake. Very interesting resistance level there and support there. So the question is, are we going to buy low on Costco and watch it go on up? Or is Costco super extended and needs to rest a little bit more? For me to take a shot at it with one of my R's, I need it to rest a little bit more. Bollingers, I think, are going to be super wide. Stochastics are going to be wild and wacky. That is pretty wild. That is pretty wacky. I need it to rest before I can place an entry on Costco. But if you are a longer term trader and you want to do something like that on Costco, I think that's a pretty, like a buy with a protective stop down here. I think that's not a bad idea. Nia says, just like buy stock, it's totally up to you. I don't buy protected puts at all, but other people do. There you go. Folks, whoever requested Costco is here. Marty, you're here. What's your question about Costco? It maybe happened 1 out of 20 times, or maybe 1 out of 50 times. I look at a stock chart and I don't get a good read on it. Overall, I'm bullish on Costco. I don't think I've ever gone in there and not just been completely amazed at the crowd of people in there. Marty says, short-term play, bullish. Depends on how short-term you want to get. If you want to do a breakout, buy stop there, like a buy stop limit up here with a protective stop down there, target 1, target 2, I think that could work out very, very nicely. Something like that. Costco has a lot of food in it. People tend to buy food in November and December. D-Man is sharing that seasonally, Costco has an average of 4.8% rise for November. Very neat. Marty says, that's exactly what I was thinking. And they buy Christmas gifts. Yes, they do. If you wanted to do something a little bit more sneaky, like a buy limit somewhere in there and a protective stop down there, you know what? I can't argue with that one, but I kind of like the buy stop limit up there a little bit better, mostly because of that volume. I think there's a great chance that all of this volume of traders, when I say volume of traders, I'm talking about 7.4 million shares that were sold on that day, were likely long-term traders that said, ouch, that's too low for me, and they closed out. Or they had a protective stop there over earnings and they closed out. Or they had a protective put and they exercised it and they closed out. If that's true and it starts to pick up again, a lot of those traders may want to try and get back in. If these are people entering to go bearish and it goes higher, they're going to be losing money and likely to buy to close to go higher. So because of the volume on that candle, I like that kind of setup better. Brad says, looks like a nice ABC correction on Costco. You're thinking like an A, B, C? Ready to go again? I can see that. Marty says, I think people overreacted do the reporting notice during earnings. That's very likely could have happened. It is Tech Giant Tuesday. We can look at Apple. Earnings coming up on Apple. It did make a higher low, so if you are in on this thing bullish, congratulations. Earnings coming up, so if you want to buy your put now, somewhere around in there, probably going to be pretty cheap, but I am more bullish than bearish on Apple. Amazon's been pretty interesting lately. I think this could be an ABC pattern on Amazon. Definitely going to wait till after earnings before I make a play on Amazon. That does look double top-ish. Lower highs, lower lows, waiting to see what that does. Facebook, been on a bearish trend down into a support level. Going to let that wiggle a little bit, maybe go bullish after earnings, but definitely got to wait for earnings. Baba at a really strong support, so let's wait to see what that one does. Earnings coming up very soon. And I'll look at Twitter, and then I'll wrap it up. Benjamin says, Twitter looks like it may be time. Ooh, earnings got to be coming up. 16 days until earnings on Twitter. But I do agree. If you want to buy calls, like a 30 strike call or maybe even a 31 strike call with a couple of months over earnings, that might suit you pretty well. But I agree, it's into support. I would be looking to go bullish right now if earnings were not coming up and staring at me in the face. Folks, that's my time. You guys rock. I will be typing up the weekly options newsletter, which will be for NEO. I will decide before the market opens tomorrow if I'm going to take this call on lows. I think I am, folks. And I will be making adjustments on MU tomorrow morning as well. So that's it for me. You guys rock. Thanks for trading with me. I'll be day trading tomorrow morning. And I have to look. I don't know if it's me on the afternoon floor tomorrow or if it's Blake, but someone will be with you for sure. And as always, trade on logic, not on hope.